Hello and welcome to today's webinar on trend trading. We're going to focus on some various Forex pairs that are showing some very nice correlations where we can set up some risk-reward parameters using those trend lines that are so helpful. My name is J Kahn. You can see my email there if you have any questions, and you can also go to my website there, jupiterpeakfinancial.com, to learn about any other type of information that I have regarding my consulting company, working with traders and investors, looking at various strategies depending on who they are. So today we're going to cover, like I said, trend trading and technical analysis, but we'll always get into fundamental analysis. We'll get into a little bit of trading psychology. It's hard for me to talk to anyone, whether I'm giving a lecture or working one-on-one or working in a group setting like this, without touching on trading psychology, because I think trading psychology is the basis for all of our decisions and for success, or hopefully not, or failure in trading the financial market. So Forex trading is one of the riskiest forms of investment available in the financial markets. Make sure that you understand that the possibility exists for a substantial loss of funds, and therefore you should not invest money that you cannot afford to lose. Also, a volatile markets disclaimer. We'll talk about volatility today, but remember that all of your orders become what we call market orders. Even if you put in what's called a conditional order, there are no guarantees where you're filled, so they may be filled away from where you plan them to be. So you've got to make sure that you adjust for that in your trading plan, depending on how volatile the markets are, depending on announcements and trading ranges and things like that. So the outline of where we're going today: fundamental analysis. We'll talk about some macro and micro events to set up our move into technical analysis. We'll use the FX Street strong analysis to help us with that fundamental data and to form those opinions. Technical analysis, we'll talk briefly about intermarket relationships and are they working, and then we'll move into trend lines. And just some bullet points here. I want you to think of those trend lines as support and resistance. I want you to think of using trend lines horizontally and diagonally, and then we'll go into a little bit more of the specifics of trend lines and how they're used, and definitely applying those trend lines to help us with risk-reward analysis, and then reviews, questions, and links. So fundamental analysis, a quick discussion of current events and what they mean for traders and investors. This is done using FX Street, so a couple of different ways to do this using FX Street. A number of great collaborators put together their information, including myself, on that site, so take advantage of that great analysis. But a lot of fundamental news on there, and then also an economic calendar, which I'm going to show you. And finally, your broker. Your broker is supporting you with great education, so make sure you take advantage of that. So I'm going to switch the screen very quickly here, just to move over to the FX Street pages. So first and foremost, the economic calendar, which I mentioned, is right here. And this is a list of everything going on as far as economic data around the world. The U.S. today had some data as far as jobs data. We also had ECB policy today. We also have Bank of England policy today. So a very busy day. I write daily market commentary, and I try and preference what's going to be big. And obviously Thursday, I pointed out in some places, Friday around the world, depending on where you are. Definitely to keep an eye on this economic calendar and be proactive. You don't want to be trading today and not knowing that there's announcements, because these announcements have could have a huge effect on the markets and make ranges a little bit larger than usual. And we did have some good movement early today, and we will show you that in just a moment. So economic calendar. There's also just, again, the fundamental news overall. If you click on the fundamental tab here at FX Street, you can see lots of great commentary throughout the day, keep you posted on everything. So take advantage of that great movement, or great updating as far as data goes. All right, getting back into the slides then. So again, fundamental analysis, you can stay on top of it. through your broker, through FX Street, through staying on top of that economic calendar, which is so very, very important. Technical analysis. 3 keywords I think are very important: trends, support, and resistance. And then a 4th one there, intermarket relationships, understanding fundamentals out there, understanding what other markets are doing, equity markets, bond markets, and then seeing what the Forex markets are doing. So intermarket relationships, I feel that if I have a knowledge of one thing and how that relates to my market, so if I have an understanding of the equity market and the bond market and what that means for me as a Forex trader, then I can start to build these trading plans and maybe catch what I call a trading edge. But aside from that, trends, support, and resistance. And we're going to obviously talk about trend lines today, and we're going to use them to help us with support and resistance. Trend lines, how to draw. Again, think of them as support and resistance lines. All right, you can draw them horizontally, straight across, and then you can also draw them diagonally, kind of diagonally up, where they might be acting as a support line, or diagonally down, maybe acting as a resistance line. And then sometimes you get what we call railroad tracks or parallel trend lines, where you might have a trend channel. 2 parallel trend lines, either going horizontally or diagonally, but that's where they are kind of creating a support and resistance band. So now from here, we're going to move into the Forex chart. All right, and I'm going to bring up the platform here. And again, even though I'm using, maybe you see various different brokers up here, no recommendation by any means as far as which broker to use. Make sure you do your due diligence there as far as what's best for your trading strategies, your trading time frame, where you are around the world. So let's bring up a longer term picture, because I like to start on the longer term so we can kind of get an idea of what's going on. So I'm going to go out to a daily chart, and the first one I'm going to bring up is the GBP US dollar. And even before I go out there, I'll just show you a 5-minute chart. So you can see I talked about maybe being active today, lots of economic data today. Well, obviously this morning we had a huge move up in the pound versus the US dollar in reaction maybe to equity markets, in reaction to what the Bank of England said, in reaction to what their neighbors, the ECB, said. So that's the fundamental data that you've got to review and be on top of, so that you're not caught trading in the middle of that without a plan, without understanding what fundamental data. Because let's face it, this is a huge move. 60.36 up to almost 61 even, and that happened in a 15 or 20 minute span. So it could have been a result of an announcement or the equity opening in the U.S., whatever it may be. It's your job to do your analysis. So let's draw some trend lines. As you can see, the pound has been kind of steadily moving up on this daily chart. Over the past year, it's kind of been going, starting in the lower left and finishing in the upper right. So it's an uptrend. The pound generally has been stronger than the U.S. dollar, and so I want to just get some guideline and see if I can just draw some trend lines and connect some points. So here I go right here, and now here's the point of trend lines. The more I'm just looking at questions while I'm doing this, so that's why I'm pausing. Is there 5 days in the week or 6 for IBFX? They go by 6, so you have Sunday evening when the markets open up in the U.S., so Monday if you're in the Far East, and then they go all the way through Friday afternoon, so that's IBFX. But again, if you have questions on specific brokers, make sure that you do your due diligence and reach out. Remember, brokers survive because you trade there, and you trade successfully. That's why they're providing education, and they want to be there to answer your questions, so make sure you reach out to them. If they're not answering your questions, then you may not want to do business with them. It really is a personal choice as far as how they are working and relating with you. So look at this trend line. The more points a trend line touches and the longer it's been in place, the more valid it is, the more traders that see it. Now, I'm not saying that a 5-minute intraday trader on that 5-minute chart is going to use this, but think about it. If you're aware of the bigger picture and you're aware of the overall trend, a short-term trader can use a long-term moving average. A short-term trader can use a long-term trend line. All right, so just keep that in mind, that we have a long-term trend line in place moving from lower left to upper right, and it has been providing support over and over and over again. And just yesterday we came down to that area. So here's what I mean by risk reward. If I'm going to take a chance to use this trend line as support, what I can do is I can put my alert to alert me as the price comes down close to it, and I can put my limit order very close to it. And if I get filled, now I'm in. And as you know, some brokers let you use a limit order, but limit doesn't mean you're guaranteed to be filled. There are limit orders turn into market orders, so it's a condition order turning into a market order. So you may get filled somewhere a little bit away from where you plan to, but depending on the speed of the markets, hopefully close. And then you say, my theory is this trend line is going to hold. That's why I want to get in here. So I put my order in, I get filled, and I put my stop somewhere below that trend line. If that trend line is broken, my theory is busted, my support line is busted, I want to get out. So maybe you plan to get in around 60-20, 60-30, whatever it may be, and you put your stop in 50 pips below, 75 pips below, 100 pips below, and if it bounces off like it has in the past, that's your goal. And in the past, every time it hits that trend line, no guarantees of it doing that in the future, but it bounces off, it goes 54.30 up to 57. It goes 54.70 up to 57.20. 55 on up to 57. So now you got to gauge and say, hey, 100, 150, 200 pips seems reasonable. Here it bounced off at 58.20 and started to climb up 60.20, 61.20, 62, 200, 200 pips, no problem. I see maybe the risk reward showing me that risking 50 pips to 75 pips to 100 is valid because I might be able to make 100 pips, 175 pips, 200 pips. That's the goal of using the trend lines as far as risk reward. If I shrink this down to a shorter term trader, you can see that the trend line does come in right down here on a shorter term chart. So looking at longer term helps you be a shorter term trader and maybe try and buy dips in the pound because it's been bullish overall, and buying dips at a trend line that's been acting as support longer term can help you. We don't have that many pairs in Forex. We're lucky. Stock traders and option traders, they have to look at thousands of entities if they choose to, because that's what's available. And here we have 10, 15 pairs that we can choose from. The majors, the 6 U.S. majors, the euro and the pound, the Aussie, the New Zealand dollar, and the Swiss franc, and the Canadian, maybe the U.S. yen. You only have 7 pairs to get really, really intimate with. So that's your watch list, and you should know it very, very well. All right? So that's a look at the pound U.S. dollar and its uptrend longer term. Let's go and take a look at the euro U.S. dollar, the same time frame, daily chart, similar patterns, and I can go ahead and draw this trend line right here. Pretty similar as it came up. Some people, and this is where technical analysis kind of can change, some people might take those tails out there and draw the trend line like that, and that's probably a little bit more. These tails here where it was rejected came back up. So it sold down there and then closed above. Sold down and closed above that trend line. Sold down and closed above that trend line. So I think this trend line that I drew, the second one, is probably a little bit more valid. All right, so I'm going to go ahead and delete these and redraw. I think that this trend line for sure is more valid because it shows this true support line. Even here, rejected. Rejected down here, rejected again. So the euro and the pound showed up to be looking like kind of similar patterns. All right, that's pretty important to see there, that you have 2 regions of the world, the U.S. versus the euro region, the U.S. versus the pound region, and they're looking pretty similar. Maybe you want to draw horizontal trend lines, all right, and you want to look at some resistance because we're up high. Can we find some resistance? So I'm going to delete these and show you now how to draw a horizontal trend line, just right here. That's showing me a bunch of resistance from back in April and all the way through to recent data right here. So what happens when we get back up there? Now your risk reward, you start to build in parameters. You have a support line right here that we bounced off of. If you don't get in here and you see that the range between these 2 support and resistance lines right here, 30.36 at the bottom and 32.87 at the top, and right now we're at 32.20, we're kind of in the middle to the upper third. Is your risk reward good to buy here and have resistance here? Or is your risk reward better to buy on the trend line here, have a small amount of risk because you put your stop below it, and have potential for greater reward? So do you want to play in the middle of the range, or near the bottom of the range, or near the top of the range? Probably buying near the bottom of the range because your risk reward is better, and selling at the top of the range because your risk reward is better. If you get short here, put your stop above that trend line, and if it rolls down, great. If it goes through the trend line, you have a small loss. So that's what we're using trend lines to develop risk reward. All right. Let's go to the Aussie US dollar, one that's been active, one of our commodity currencies. We'll go out to a daily chart. I will take off some of my old analysis here for you, and we'll start from scratch. Okay? Same kind of thing, strength. You can see the overall pattern. There has been some strength of this pair, the Aussie over the US dollar. We definitely have some resistance that we can put. Let's take a look at this resistance line right about here. Okay, we're there. We're at resistance. Look how many times it touched. Back in March of 2012, in August of 2012, in November of 2012, and then you have obviously in December of 2012 and now January of 2013. What are you going to do here? No guarantees that it uses the resistance and goes down. What are you going to do? What fundamental analysis have you been able to put together that says this resistance line I think is going to hold? Or, no, I don't think that the Aussie dollar is going to be stopped here because of things going on in the U.S. and their interest rate policy and the Aussie and their interest rate policy, whatever it may be. We will see, but I can probably say with a high degree of confidence that there are people using this level to maybe get out of their longs, because they've had a good run and it's at resistance, and maybe take off some of that profit and leave some maybe up here that hopefully a couple contracts keep going on higher. But they don't have to be, prove anything. They can say, based on past data, we've been resisted here. This is a good place to maybe take some off the table, move my stops up, and I'll show you what I mean by moving stops up. And other people are probably saying, hey, I'm going to try and get short here. I'm going to put my stop up here and hope it rolls down like it has in the past, and use the charts to tell me what is realistic. It hits this 50, 105.80 level, and it rolls off. How many pips? Well, the charts tell you that. Let the chart do your analysis. You don't have to get this entire move from 105.80 to 101.60. Right here again, 105.80 to 101.50. You don't have to get that entire move, but you can use the charts to tell you what is realistic to build your risk reward. But I also know that on the stop side, I don't have to risk hundreds and hundreds and hundreds of pips. I know I'm wrong if it goes above this area. So maybe 75 pips, maybe 65 pips, something like that. I'm not happy if it starts to go 50 to 65 pips up this way above that line. Looking a little bit at a shorter time frame on this, here's that same resistance line up here at the top. And then what I mean by moving stops up, maybe I can use some kind of trend line like this, and I got in down here, I got in here, I got in here, I'm approaching resistance, I might take some contracts off to play with house money, I might keep some on, but I'm moving my stop up. I might be using this trend line, I might be using a moving average, I might be using this support, congestion area here. I'm not going to let this turn around and turn into a loser and run all the way back down to my entry. I'm going to keep moving my stop up, my stop up, my stop up. I'm going to be managing my trade as it moves. I'm very happy here. I hope it goes higher if I'm long, but I'm not going to let it turn around and go to a scratch or into a loser. I'm going to move my stops and manage that. All right? So that is trend trading on three pairs looking long term. Looking a little shorter term, we started to do that there on the Aussie as we see it spiking up towards resistance, but we could also do that on the Euro and start to look at maybe a little bit shorter time frame and start to see what's going on. And again, we're doing that right here, we know that we have this nice upward sloping line. So we move down to a 4-hour chart, we move over to a 1-hour chart, we move over to a 30-minute chart for some of you day traders, and so you can kind of see what's going on here. What's going on as of late. So we're just looking at about a week of data, 5, 6, 7 trading days since the new year has happened. And you can see some pretty good support here. Again, you take this shorter term chart into context knowing the longer term chart and the longer term trend lines and support. And even if you didn't know that longer term chart, you might be able to say, hey, there's a good amount of support kind of right in this area down here. So you just have to decide how many pips are you risking, how many pips are you trying to make as a shorter-term trader given the trading range each day. So as a shorter-term trader, I've got to take into account one day at a time and say, what's my trading range? And if I buy it down here, what's achievable for my short-term time frame? Am I trading for minutes? Am I trading for a half hour? Am I trading for a few hours? What is achievable given my trading time frame for this specific trade? Hundreds of pips is not going to be achievable if you're trading for minutes and hours. All right. If you're trading for days, yeah, hundreds of pips are achievable. You risk more to make more over a longer period of time. But over the shorter term, you might only be risking 20 pips to make 50 pips, or 20 pips to make 30 pips, and that's what you're showing down here as you see this support line here. This is 1 day here, buying it down near support, 30.30, and it rallies to 30.70, 40 pips or so. You buy it down here again, 30.30, and it rallies up to 30.70. And you're doing the same thing over and over using that support line, even if you weren't aware of that longer term picture. So someone is just commenting that the euro is rallying again. Absolutely, the euro is rallying again. But longer term, again, if you're not already in, what is your reward if you start to buy here? What is your risk if you start to buy here? Your risk is it goes back down. Your reward is it comes up here. So you would have to have this reward part right here, this gap, 132 to 132.12 to 132.90 is smaller than the move from here, 132.15 to 130.35. You'd have to have some stop somewhere in here because you don't want to be risking more than you're making. You'd have to have a moving average or a Fibonacci or some other support, intermediate support line that you say, I'm out if it starts to go back the other way. So the person was just saying, yeah, the euro is rallying, absolutely, and they were just replying back, they're not in, they have no bias in the morning. So again, it depends on where you are around the world because it's not the morning, obviously, in Europe during the session. They're getting ready to close. So it just depends on what pairs you're trading, where you live, and what the activity is during that time frame, all right? I'm focusing on the U.S. majors. I'm located in the U.S. area, so I understand the U.S. economy, and I have to compare that against one other economy. I don't personally trade the Aussie versus the yen because I don't live in Australia and I don't live in Japan, and I don't get that same kind of banter and news and analysis on those pairs, and I don't live there and I can't feel that economy. I can feel this economy in the U.S., and I have to compare it to one other economy. So me personally, I stick to the majors, but that's just me based on where I live. Ultimately, I would love to be living in Europe and trading because I think that's a great time frame to trade. I don't choose to stay up all night and trade and in the morning and trade because I don't think anybody can do that. So I trade the morning hours during the U.S. Equity Open because that fits with my lifestyle and where I happen to live. But again, that's what I mean by your trading personality and your trading psychology, what works for you depending on where you are. Because Forex, obviously, you know you can trade anytime throughout the day and you can be anywhere around the world as long as you have a decent connection to the internet. That's what's exciting about it. And it's always, always moving. How much is it moving? That's what your analysis is. What's realistic? That's what comes down to your analysis. All right? So I think that trend lines, you don't have to get so fancy with all these different indicators. You can understand price action. And price action is backed up by trend lines. Which way are we trending? The old adage, the trend is your friend. If the trend is up, I might want to be buying dips, and that fundamentally and technically is proven in 3 of these pairs against the U.S. dollar. The pound has been strong against the U.S. dollar, the euro has been strong against the U.S. dollar, and the Aussie has been strong against the U.S. dollar. All right? So trend lines. How to draw them? Looking horizontal, looking diagonal. I didn't find any parallel trend lines and trend channels, but that can be very, very useful. Trend lines, too. Many points. The more points they touch and the longer they're in place, the more valid, the more, people will be taking a look and finding those and seeing those, so the more you want to pay attention. If you trade off of a trend line that's been around for a long time and it violates your trend line and it violates your theory and you don't get out, well, there's a lot of people that might be getting out and pushing it against you. So you want to make sure that you stay true to your trading plan, and if it's violated, you get out. Not emotional, it's mechanical. The trend line was your reason to get in. If it's violated, the trend line is the reason to get out. Risk to reward. We saw how it helps us with risk to reward. Use the charts in the past to say what's realistic, and then go forward with that as part of your trading plan. So a question came in, what time frames do you enter and exit? Again, it depends. I actually trade longer term, and I trade short term. I scalp in the Forex markets, but I also use the Forex markets as kind of a hedge against equity portfolios and other relationships that I see there, and maybe some commodity holdings and things like that. So it all depends on what I'm trying to achieve, but that's what I'm saying is use the charts. If you're a short-term trader, use the charts to tell you what's achievable in your short-term time frame. If you're a longer-term trader, look at the charts over the time frame that you expect to be in and say, if I expect to be in for the next 3 to 5 to 7 days, what has happened previously in the 3 to 5 to 7 day period for that Forex pair. So again, it depends on where you live, when you're trading, and what pairs you're trading. All right, so application, drawing horizontal lines, drawing diagonal lines, creating trading plans. I think that we did a good job of seeing that today, how important of a tool they are and really how simple they are to apply. It takes a little bit of getting used to, but let's face it, this isn't some, really advanced indicator that you have to wait for it to get to the 80 line or the 20 line like stochastics, and you have to wait for, this to converge and that to diverge. So these are pretty simplistic, but the main thing is they help you understand the trend. The trend is your friend, one of the oldest, most important adages. To review, fundamental events, very, very important. Stay on top of that using FX Street, great news, and great collaborators, chiming in with their opinions for the pairs that you're looking at and for the different markets that you need to be paying attention to. Technical analysis, trend, support, resistance, and some intermarket relationships. Yes, it might take paying attention to the equity markets or the bond markets to help you be a Forex trader. Trend lines, how we use them, why we use them, and the application of them. And then the next slide, resources. I'm answering the questions as we move. So someone was just asking, you're working from a trading room. I have a trading room with a partner, and then I also have my own in a small office where we get together and talk about the markets. And then I also have my own trading room in my house where I'm very comfortable trading, but it's nice to get out a little bit and talk with other people. I used to be in a large trading room in a firm. We were all prop traders trading different markets, all talking, and technology has come along, and now people can kind of do it very easily from their own homes. They don't have to be in an office. The speed has come along with trading and obviously with internet and broadband. So sometimes I miss talking with other traders, and that's why it's nice to get on with you guys. You guys are pointing out things like the euro's still rallying. You guys are asking me questions. So this talking to people like this is just kind of a break from trading for a little bit, and it helps me mentally because it just makes me sit back. It makes me do some work that I might not normally do. It makes me look at things I might not normally look at, and so it kind of opens my eyes. So I see working with others and talking to others this way as a win-win for me as far as my own trading goes. Resources, you can find me on FX Street. I'm going to bring that up in just a moment. My website is there where I do some commentary and some other resources and explains my consulting process when I work with individuals. JupiterPeakFinancial.com, and then you obviously have my email as well. All right, so let's move over to that FX Street profile just so that you can see it. All right, so here it is. Here's the information where you can see all of the past webinars that I've done for FX Street. I look forward to being involved and doing another webinar soon for you guys. It's always really well attended. There's always great participation, great questions. Like I said, the questions help us touch on other subjects such as fundamental analysis, such as trading psychology. So we got a little bit off the topic of trend trading, but I think it all comes together. Trading psychology is first and foremost. Understand who you are and what's achievable for your situation. Use the fundamentals to develop opinions, and then use the technical analysis to develop your risk-reward trade, and use the charts to get you in, use the charts to get you out at a kind of mechanical, non-emotional state. All right? So I appreciate your time today. It's been great to be on with you. And again, you know how to reach out to me if you have any follow-up questions. So thank you very much for the FX Street for having me on today.